Hello, everyone, and welcome to the third monthly Alps webinar, which is an introduction to AMS insurance services and its market-leading asset-secure gap insurance. We're very pleased to welcome as guest speaker Paul Fuller, who is the Managing Director of AMS Insurance Services, who is going to inform us on a range of topics, including who they are, what they do, why your customers need gap, the infamous FCA intervention, and the different types of gap cover as well. There'll be an opportunity to ask questions. So if you do have any, please put them in the chat and we'll put them to Paul at the end of the presentation. And without any further delay, I'm going to hand over to Paul.
Yeah, okay. Thank you, Nick, for the introduction. Welcome, everybody, and thank you for taking the time to hear me today. I am going to go through a PowerPoint presentation, so I hope that I won't bore you too much with this. I'm very passionate about this. We've faced a lot of criticism from the press recently due to the FCA interventions, and I shall go through some of that through the presentation. So I'm just going to share my screen with you all. And hopefully that is now showing, Nick. So as Nick introduced, I am the Managing Director of AMS Insurance Services, and I'm really delighted to be here today, invited by Alps to present this to you. So today I'm going to cover what the customers say, who we are, about gap insurance, the need for gap insurance, recent claim examples, and the infamous FCA intervention, and then I'm going to show you the actual numbers. We'll go through the Asset Secure Gap Plus product, its features and benefits, customer benefits, and then claims management. At the end, we'll just have a quick fire recap. So hopefully by the end of the webinar, you'll go away with a good knowledge of who we are and what we do, an understanding of the FCA intervention and how we managed to continue operating through the review. You'll have a good knowledge of how our gap insurance works and how it would benefit your customers. And then hopefully you'll go away knowing that you can call me or my team for any assistance, training, or guidance. While it may be somewhat unconventional, I've chosen to begin the presentation with the voices of our customers. Because as mentioned, gap insurance has faced criticism in recent times, much of which we believe is unwarranted. Although a small minority of distributors may not have met expected standards, the vast majority of us did and acted responsibly and with integrity. At the heart of our operations is a commitment to consumer duty. We continuously evolve our practices to ensure our products and our services deliver good outcomes for our customers and are aligned to the expectations of the regulator. The value of our gap products is quite evident, not just in theory, but in practice. Our customers consistently share their appreciation, reinforcing the meaningful impact the products have on their lives. And I'm proud of my team who exemplify compassion, empathy, and are able to recognise and support customers facing a wide range of vulnerabilities, allowing them to tailor the approach to meet individuals' needs with care and precision. So what I'd like to do is just quickly zoom down and read some feedback. And as you will hear, it's not just about paying a claim, it's about making the journey as smooth and efficient as possible, not adding stress to the customer and hopefully relieving some. So this is what Brian had to say. I was very satisfied with the service. Everyone I spoke to was helpful, polite, and professional. The entire process was handled quickly and efficiently, which made the experience stress-free. And this is what Amy had to say. All the staff at AMS who I contacted, both by phone and by email, were courteous, helpful, and efficient. In the final situation, with problems being thrown time and again by the vehicle finance company, staff remained helpful and understanding. Thank you for being brilliant at a difficult time. These are feedbacks that I'm proud of and my team are dedicated to their tasks on a daily basis. So who are we? Well, we were established in 1992. We launched our flagship asset secure gap insurance products, introducing full cover protection to the UK market. Among our innovative offerings is Gap Plus, the first policy to combine finance shortfall cover with return to invoice protection in a single solution. This pioneering approach quickly positioned us as one of the leaders in gap insurance, where we remain today. Driven by continuous innovation and an unwavering commitment to customer service, we've become a trusted provider of gap insurance solutions to brokers and finance companies throughout the UK. Our asset products, of which you now have access to, are underwritten exclusively for us by leading insurance partners. Importantly, none of our policies contain market value, insured value, or other restrictive clauses that may lead to claim reduction or rejection. I'll show you a slide later on that we'll see how our claims acceptance rates and our complaints rates are. With the Asset Secure product, you can be confident that both your customers' assets and your company's reputation are comprehensively protected. So a bit about gap insurance. It was introduced to the American market back in the late 70s and became available to the UK in the early 90s. And the gap is designed to pay the shortfall between the amount a motor insurer pays on a motor insurance policy and the original purchase price of the motor vehicle, or the outstanding balance owed on a finance agreement, whichever is the greater following a total loss. So why have gap? Well, here are some interesting facts for you. In 2024, 562,000 vehicles were recorded as written off. This is from the DVLA. Over 129,000 vehicles were stolen between April 23 and March 24. Vehicle crime represents around 3.6% of all crime in the UK. And unfortunately, vehicles today are more likely to be written off than repaired. This partly due to increased labour costs and the cost and availability of parts. So on average, a vehicle is written off every minute. So the statistics do not lie. As mentioned in the previous slide, according to the DVLA, in 24, approximately 560,000 vehicles were recorded as written off. This equates to about one vehicle every minute and is a significant rise compared to the previous years. In fact, it's 46% increase compared to 2017, when the figure was around 384,000. So why have gap? Well, typically, the main insurer will pay out the market value or the value they believe of the car at the time of the incident. However, this amount may not cover the original purchase price or the outstanding finance left on the vehicle. So I'd just like to show you a couple of examples of how the product performs and delivers good outcomes for consumers. So in the first example, we can see the vehicle was purchased in March 24 for £97,000. It was then unfortunately involved in an incident and it was written off in July 25 with an insurance valuation of £67,650. So this left a shortfall of £29,350. The insurer did pay out the market value of £67,650, and we then paid the finance company £6,611 and the policyholder £22,738. So in total, we paid out £29,350. The first example was a Range Rover, and they do have a bit of a reputation with our claims department. And then we move on to the second example, which is a Tesla, so a fully electric vehicle. The vehicle again was purchased in April 23 for £32,700, and it was unfortunately written off in July 25 with an insurance valuation of £16,184. This left a shortfall of 16,516. The insurer did pay out 16,184, and we paid the finance company 6,064, and the policyholder 10,700. So in total, we paid out 16,765. Now, these claims have become quite common, but I'm just putting out two examples for you. So, as you will likely be aware, there was an intervention from the regulator in the FCA requested a voluntary pause in sale of gap insurance due to concerns they believed the product was not offering fair value to consumers. My experience and dealings show there was not anything really voluntary with the FCA's approach. Their key reason for the pause, low claim payouts. Their FCA data showed only 6% of the premiums paid by customers were being returned in claims. On the following slide, I shall show you this is not correct, and the value measures report used was not fit for purpose for policy terms exceeding 12 months. I did share my concerns with local MPs and the regulator on numerous occasions. They also were concerned that some firms were paying up to 70% of the premium value in commissions to distributors such as car dealers. Here again, I highlight, they said some firms, and realistically, this was aimed at dealerships. However, the regulator sought to close down the entire gap market, and unfortunately, this led to a number of good businesses going into administration due to income starvation. Not only this, but it also created harm to consumers who could not access the product. So they also had a few concerns over the product design and consumer duty compliance. So here in this slide, of which we have in our monthly board meeting pack, concerned specifically on consumer duty and good outcomes. So what we can see is that contrary to the FCA value measures report for 2022, which stated only 6% of consumer premium was being paid out in claims, the actual picture now is 63%. And this will further increase as the last policy is not set to expire until September 27. In 2025, this year alone, we have paid out 145 claims for policies that were taken out in 2022, and this totals 1.2 million. So as you can see, it's going to have an impact on the value measures report that was generated in 2022. And again, you can also see consumer premium being paid out in claims sits at 57% for policies incepted in 23, 32% for 24, and 15% for 2025. Now that 15% looks low, but that book is still going to run until 2030. So this next slide, the source of this information is from the General Insurance Value Measures Report of 2022. And the measures report showed that gap insurance had a very healthy high claims acceptance rate at 95% for gap add-on products and 99% for gap standalone products. The report clearly showed that some other insurance products, non-gap, had not performed so well, with the worst performer having a claims acceptance rate of only 52%. Value measures report also showed that gap insurance had a very healthy low complaints rate at 3.7% for the add-on product and 0.6% for the standalone product. Sorry, you will be having the standalone product. That's what your product would be. The report clearly showed that some other insurance products, non-gap again, had not performed so well, with the worst performer having a complaint rate of 11.9%. We believe the high claims acceptance rate and the low complaints rate is down to the gap products delivering to the expectations of consumers and doing exactly what it says on the tin. So older members among us may remember the old Ron Seal advert. Well, I thought it was apt for this. So if I could just show you a claim that was paid out in 25 for a policy that was incepted in 22. Remember the FCA General Insurance Value Measure report showing only 6% of consumer premium being paid out in claims? Well, that report does not factor in that gap insurance policies incepted in 2022 can continue to pay out claims for up to a further 4 years. So the vehicle in this example was purchased for 56,000 in June 2022 and was written off in March 25 with an insurer value of 21,000. The insurer paid the policyholder the 21,000 and we paid the customer a further 34,000. The customer was pleased she had purchased gap insurance, and wouldn't you be? Sorry. So I'd just like to, oh, sorry, that's the wrong slide. It's going to happen at some point. So we, of course, conducted reviews and reported to the regulator along with our insurance partners. So cooperating with the insurer and the regulator, we conducted in-depth product reviews, deep diving into other things, fair value assessments, distribution costs to quite an extreme granular level, product cover provisions, commission allowances, claims data, and consumer outcomes. Through our cooperative efforts, we were fortunate enough, among the very few, that we're able to keep our online distribution channels open throughout the regulator's review. All our other distribution channels came on in March 25. So now I'd like to introduce you to the asset secure gap product that you now have access to through Alps. So what is this type of insurance? What does it cover and what does it not cover? Well, it's designed to pay the shortfall between the amount the motor insurer pays on the motor insurance policy and the original purchase price of the motor vehicle, or the outstanding balance owed on any finance agreement, whichever is the greater following a total loss. What it covers: passenger cars, light commercial vehicles up to 3.5 tons gross vehicle weight. We contribute up to 250 excess if applied by the main insurer. And we cover up to 110% of the vehicle's value at the time of purchase. What we don't cover are vehicles over 10 years old, vehicles valued over 125,000, vehicles valued under 5,000, vehicles not listed on the Glasses guide, vehicles previously written off. We also don't cover Ferrari, Lamborghini, Maserati, and Rolls-Royce. We don't provide currently cover for taxis, driving tuition vehicles, courier or delivery vehicles. That would include people using vehicles for Uber Eats and the likes. We don't cover private or public rental vehicles or any vehicles used for rally or competition. We also don't cover any amount that's pre-agreed with the main insurer at the time of taking the comprehensive insurance out. Key customer benefits really here are it doing exactly what it says and what it's designed to, which is to eliminate depreciation by paying the difference between the insurance settlement and the vehicle's original purchase price, including the deposit, along with reducing financial risk by paying out any outstanding finance owed on the vehicle. So key features for you to look at. The benefits of the product. You can sell to your clients up to 180 days from the vehicle purchase. We pay up to 250 towards any insurance excess if applied by the insurer. There are no mileage limitations. We do cover vehicles up to 10 years old. Cover is available for up to 4-year terms. The maximum vehicle is up to 125k and the minimum is 5k. The maximum claim limit we have is 50,000. And we do cover all factory fitted accessories. And for your customers, they'll be pleased to know that we do pay claims out within 24 hours of receiving all required documentation. And the policy is transferable to another vehicle if it's the same sort of vehicle at the same sort of price as the original. So who would benefit from such a policy? I guess this also is your target market, is registered owners and or keepers of motor vehicles valued between 5,000 and 125,000 throughout the United Kingdom, and who in the event of a total loss claim want to cover the shortfall between the gross offer from their insurance provider and the original invoice price of the motor vehicle and or the outstanding finance amount. You can offer GAP to persons who have bought their vehicle on finance or bought the vehicle outright for cash. Persons who have bought either a new or used vehicle within the last 180 days from a registered dealer. You can offer it to owners and keepers of passenger vehicles, as mentioned, and we've just released motorhomes and commercial vehicles up to 3.5 ton GVW. And you can sell to any private, self-employed or limited company. As one would expect, there are, of course, some restrictions on cover, and these are listed below. What I'll do, I won't go through these individually, but you will have access to the presentation after this. We do, of course, have cancellations on policies, and these are generally when the policyholder has sold the vehicle and purchased a new one. And we are able to transfer policies to new vehicles at no cost to the consumer, so long as the new vehicle is similar in price to the previous vehicle. If a customer does cancel within the first 30 days, they will receive a full 100% refund. And if they do cancel after 30 days, they would receive a daily pro rata refund of the premium. We don't charge any cancellation fees. So it's as easy for the policyholder to cancel the policy as it was for them to take the policy out in the first place. We have no hidden fees. We do the claims in-house. So as direct cover holders, we are authorized to issue policies, manage claims, and make direct payments to customers. This eliminates the need for time-consuming referrals to the underwriters or external claims administrators. All the claims are handled by our dedicated and highly experienced in-house claims team. And we do pride ourselves on delivering fast and efficient customer service, with claims typically settled within 24 hours of receiving all required documentation. We consistently uphold the highest standards of customer service, ensuring good outcomes for consumers at every stage of the journey. We have digitalized a lot of our process to ensure that the customers keep on top of the claims and providing the details and the information that we require, because we want them resolved as soon as possible. So the customer has the money in the bank, they can go back and buy another vehicle and come back to you for their next gap insurance product. So if we move on, as we're coming to the end of the presentation, I'd just like to do a quick fire recap. So the policy is suitable for vehicles purchased on finance or bought outright. The policy can be sold up to 180 days post-vehicle purchase. Our policies contain no market value or other claim reduction clauses. Max vehicle value is 125k, minimum 5k, maximum benefit is 50k, and we do terms up to 4 years. Claims, as mentioned, are all done in-house and would be paid within 24 hours. We have no cancellation fees, no MTA fees. Cancellation, full refund if cancelled within 30 days. After 30 days, a daily pro rata refund. We are able to offer 10-month DD facilities, and we're able to offer training for you and your teams. So I know we had length of time to go through this presentation. However, I know that we're all busy people, so we'll probably be able to move on to some questions shortly. So I hope you now have a knowledge of who we are and what we do, AMS Insurance, an understanding of the FCA, their intervention, and how we managed to continue operating whilst they conducted their review. I hope you would have got a good knowledge of how gap insurance works, because I know I repeated a few things so it would be absorbed, and how it would benefit your customers going forward. And I hope you now have a knowledge that you can call me or my team for any assistance, training, or guidance going forward. We very much look forward to working with you all. And Nick, that's the end. Thank you.
Brilliant. Thank you, Paul. That was extremely informative. Right. If anyone's got any questions, please do put them in the chat. I've had a few that have been sent to me already. So I'll kick off with possibly a slightly morbid question, but what happens to the policy if the policyholder passes away?
Okay, so if a policyholder is unfortunate to pass away, we would be able to transfer the policy to a family member, or the family member would be able to cancel the policy, and we would pay any rebate to the family member next of kin. So they would lose no value in the policy.
Okay, we've just had one that's come up here. So will you charge a fee if the policyholder changes address or puts a private plate on the vehicle?
So we have no midterm adjustment fees. So no, it would be free of charge.
Brilliant. Another one. What happens to my policy if I sell my car?
So you would have a number of options should you sell the car midway through the policy term. We would be able to transfer the policy to the new vehicle if the vehicle is within the same sort of price banding, or we would be able to give a cancellation and give a refund on the outstanding policy premium. So, and that's done on a daily pro rata.
Excellent. And another one I've got here, if the vehicle is written off, the insurer replaces it for a like-for-like in the first year of the policy, what would happen then?
Yeah, that's a good question. We'll be aware that, in your comprehensive insurance policies, if you're the first registered owner of a vehicle, they will do a like-for-like replacement within the first year. Some insurers are actually doing it for 2 years, which is great. And what we sometimes get asked is, well, can we not defer the gap insurance for the 1 year or the 2 year? Well, we've come across a number of claims where the insurer has not replaced the vehicle in the first year. Maybe the vehicle's not available, the waiting time is too long, etc. So there are many reasons for that. What we would do if a vehicle was replaced in the first or the second year is we would then reset the policy from the start date they received the new vehicle. So if they were to receive the vehicle at the end of the first year, they would, and they had a 3-year policy to start with, they would get a new 3-year policy for that vehicle at no charge.
Excellent.
So they wouldn't lose that there.
A couple more are coming in. So would you or can you underwrite on a manual, so a bespoke basis if the car is over £125,000?
We do have direct authorization with the insurer, so we would be able to get in contact with the insurer. We are looking to try and get the increased amount from 125k upwards with certain limitations. So yeah, we would be able to do that.
Excellent. Another one. Will there be any further changes to the product by the FCA, or is this product that will be in place for the foreseeable?
Well, we've gone through all the reviews with the FCA and they were happy. They've approved the product. They've approved the services that we provide. So, things will adapt over time. We will maybe add more things into the policies as time moves on. So we morph constantly to keep up with the marketplace and ensure consumers get good outcomes.
But we're not anticipating any forced changes.
Oh, there's no forced change. to be quite honest, I believe that through the conversations I've had with the regulator, BEBA, MPs, etc., I think they were a little bit brutal with their approach.
Yeah.
Certainly closing down a whole market when I believe that they were actually targeting the dealers where the commissions were a little bit higher.
Yeah. Are there any future plans to cover executive chauffeur-driven vehicles?
That would be something we would need to engage if there's a market for it. If you've got a some good premium coming through for that, then it's certainly something we would be able to look into.
Yeah. Okay. That's brilliant. So I can't see any more questions coming through. So thank you very much, everyone, for attending. We're going to send out an email which will have a link to the webinar, so you can share that, rewatch it. I also believe we're going to be sending out copies of the slides, so everyone can go back over those. Also, keep an eye out for the email with details of the next webinar. We'll send that out shortly with some information on what that will be. But no, thank you very much to Paul.
Well, I kept it short and sweet, didn't I? I think children are on school holidays, so people want to get to look after the kids and things as well. So yeah, I hope it was informative. And like I mentioned, if you would require any training or further information, please contact us. We and myself and my team are happy to help.
Yeah. So I believe your contact details are on the slides, aren't they?
Yep. If they're not, then they certainly will be.
Yeah. Excellent.
Yep, they are.
No,
yep.
Yeah, brilliant. Well, thank you very much, and
Okay.
and goodbye.
Yeah, thanks a lot, Nick. Thank you.